I would find it would be certainly viewed by us as a significant surprise if Mark Carney were to move on rates in the UK, given that this is one, his last meeting, and two, Brexit is only just commencing. In fact, on the Brexit side, you're talking about the risks, but in fact the reality is on the Brexit side, risks have actually reduced. There's absolutely no doubt there's a lot of hurdles yet in front of the UK in regards to future trade negotiations. There may be an accelerated trade deal with the US, and hopefully Australia will be able to do some trade negotiations with the UK as well. The big one's clearly the EU, and that's the biggest risk. But trade is continuing. It's not as if trade is stopping, just the terms and the goalposts are clearly moving quite significantly. So we would think that it would be most unlikely that the Bank of England will move at this stage.
You mentioned earlier that your favoured sector when it comes to global equities is in fact European equities from a valuation standpoint. Where specifically across Europe, and can we include the UK in that as well now that we've got cable sitting back right at the 130 level?
Yeah, certainly, we're more positively disposed now to the UK than we have been for some time, given the reduction of the Brexit risk. But we think that data is starting to stabilise for the EU, and we've got quite a significant differential on a valuation basis between European equities and UK equities versus, say, the US. And so that certainly does highlight some areas for us. We're starting to be looking at the auto sector. We think that looks quite interesting. Tech and obviously some of the consumer space as well, particularly given the ECB has certainly indicated its ongoing support for stimulating growth within the EU. So that's a broad picture. The other side of it is, although we've seen big falls, Matt, today in Taiwan on the Taiwanese share market, but after a 7-year basically period of closure, we do think that the substitution impact of trade is starting to be a greater or more positive factor for the likes of Korea, Japan and Taiwan. Now again, we've got to watch what's happening on the coronavirus, but we'll be looking for a buying opportunity into emerging markets Asia on the back of the phase 1 trade deal that's been done.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.